What happens to water liability after a facility is already built? Water liability is most often treated as a site selection question. That framing helps organizations choose where to build. It does very little for operations already in place in water stressed regions, where the exposure isn't future and prospective. It's current and operational. For industrial facilities already in production, water liability surfaces in ways that site selection analysis doesn't capture. Curtailment orders that restrict how much water can be withdrawn during drought emergencies. Discharge permits tightening on each renewal cycle, regardless of what the original terms allowed. And an insurance market beginning to price water-related operational exposure differently. Each of these operates on a timeline the facility doesn't set, and each can disrupt operations that capital plans assumed were stable. The organizations best positioned to manage this aren't those that avoided water-stressed locations. Many didn't have that option, or made siting decisions before basin-level scarcity had moved into capital planning conversations. They're the ones that have looked at existing operations through a water operations lens rather than a water reporting lens, and made the distinction between what compliance frameworks require and what the operating environment now demands. What water stress looks like when a facility is already running. Industry data drawing on World Resources Institute, WRI, Aqueduct 4.0 findings shows that more than one-third of North American industrial activity is located in areas experiencing moderate to high water stress. WRI's Aqueduct framework supports the broader picture. Its data projects that $70 trillion in global gross domestic product, GDP, will be exposed to high water stress by 2050, up from $15 trillion in 2010. For operations already in those basins, the question isn't whether to disclose the exposure, it's how to manage production against a constraint that's already present. Zurich Insurance's analysis from its 2025 Global Risk Management Summit described the dynamic directly. Water is an invisible risk because most industrial operations assume availability is stable until the condition changes abruptly. The 2021 drought in Taiwan illustrated how fast that shift arrives at scale. Semiconductor manufacturers, which require ultra-pure water in large volumes for chip fabrication, faced water supply pressure as reservoir levels dropped, forcing emergency measures including water trucking and conservation while authorities prioritized chip production. Western U.S. water authorities have progressively expanded curtailment authority through recent drought cycles. A facility holding a water right or an industrial withdrawal permit does not necessarily retain unrestricted access during a drought emergency declaration. Discharge permits are tightening on renewal, and the EPA's regulatory clock has a gap. On the discharge side, the regulatory environment entering Q3 has a specific present complication. The EPA's 2021 Multi-Sector General Permit, MSGP, which governs stormwater discharges from industrial facilities nationwide under the National Pollutant Discharge Elimination System, NPDES, expired on February 28, 2026. The EPA did not issue a replacement permit before expiration. The 2021 MSGP has been administratively continued under the Administrative Procedure Act, meaning existing coverage remains in force, but facilities applying for new coverage or navigating renewal face uncertainty about the applicable standards until a new permit is finalized. Beyond the MSGP gap, individual permit renewals are imposing tighter limits on a rolling basis. Industrial facilities that previously operated under discharge standards calibrated to older water quality benchmarks are encountering revised limits at renewal, particularly for nutrient loading, thermal discharge, and per- and polyfluoroalkyl substances, PFAS, which are increasingly appearing in EPA permitting guidance and proposed monitoring requirements under draft MSGP provisions. In parts of the Midwest and Southeast, expansion applications have been conditioned on demonstrated treatment capacity upgrades before new coverage is approved, a requirement that adds cost, delay, and permitting complexity absent from the original capital plan. The American Society of Civil Engineers, ASCE, gave wastewater and stormwater infrastructure grades of D+ or lower in its 2025 infrastructure report card, reflecting underinvestment that now creates compliance exposure for industrial facilities tied to aging shared treatment systems they don't control. How the insurance market is beginning to price water operational exposure. The insurance dimension gets the least operational attention, but that's changing. Legal analysis from Clyde & Co.'s July 2025 assessment of water scarcity identifies three categories of coverage exposure, gaining underwriter attention. Casualty claims from bodily injury and property damage arising from drought-related production disruptions. Directors and officers D&O, liability for industries whose investment decisions carry material water dependency, with semiconductors and data centers as the most documented examples. And environmental impairment liability from pollution claims tied to concentration events in discharge streams during low-flow conditions. Zurich's analysis corroborates the direction. Water scarcity is increasingly treated as a material source of operational, D&O, and environmental impairment exposure. Coverage assumptions should be reviewed at renewal, where policies touch water-related shutdowns, pollution claims, or production losses from scarcity. What operations leaders should be reviewing before Q4. The practical review for existing facilities doesn't require a formal water exposure assessment to begin. Permit renewal cycles deserve active tracking. If a facility's NPDES permit or MSGP coverage renews in the next 12 to 18 months, the preparation window is already compressing. Given current agency backlogs and the uncertainty around the lapsed 2026 MSGP issuance, early engagement with the permitting authority is materially better than waiting for a renewal notice to arrive. Water withdrawal agreements, whether with a municipal supplier or under a state allocation, should also be evaluated for what curtailment provisions actually permit, not what historical operations assumed they permit. Water liability doesn't wait for the next siting decision to express itself. For operations already in place, it's in the permit file, the insurance policy, and the regional drought data right now. The gap is rarely information. It's whether operations and finance leadership have been asked to look at it together before an event forces the question. You've been listening to Sustainability Soundbites by Environment and Energy Leader. For partnership opportunities, please reach out to our team.